So that last Bitcoin crash, did that feel normal to you? Because to me, it felt like something else entirely. It felt targeted. And you know what? Some new information just dropped from JPMorgan that all but confirms it. Let's get into it, because this is looking less and less like an accident and more like a plan.
And that really is the million-dollar question, right? Was this just a healthy market correction, the kind of thing we've all seen before? Or was this a coordinated shakeout, a deliberate move by Wall Street to clear the field before they made their own big play? Because honestly, the evidence is starting to pile up, and it's all pointing one way.
Yeah, and that one direction points right at our main suspect, the big dogs on Wall Street. It really looks like they've been playing this incredibly clever and, let's be honest, pretty cynical double game. Okay, so check this out. When you lay out the timeline, it looks less like a series of coincidences and more like a playbook for a hit job. Seriously, it starts back in the summer of 25 with these huge short trades piling up against MicroStrategy. Then, in Q3, JPMorgan, kinda on the down low, jacks up the margin requirements on MicroStrategy's loans, making it way harder for them to borrow. Then, what do you know, this memo from MSCI pops up talking about maybe delisting companies that hold a lot of Bitcoin. And right at the peak of all that fear, JPMorgan makes sure to blast that warning out to all of its clients. The cherry on top? Just this week, JPMorgan launches its own leveraged Bitcoin product built right on top of BlackRock's ETF. I mean, come on! The message here is just crystal clear, isn't it? This was never about risk. This was about control. They were essentially saying, hey, don't use their Bitcoin for leverage, it's too risky, but you can totally use ours. They manufactured fear around MicroStrategy's strategy, scared everyone away, and then rolled out the red carpet for their own version of the very same thing. So you gotta ask, why go through all that trouble, right? Well, this wasn't just about knocking out a competitor. It was way bigger than that. This was about getting into position for a massive, fundamental shift in what actually drives the price of Bitcoin. We're talking about a whole new paradigm for the market. You know, for the longest time, we all lived and died by the 4-year halving cycle. It was predictable, it was like clockwork, but that playbook might be totally out of date now. The new driver, it's the global business cycle. We're talking about huge macro forces here, global liquidity, interest rates, the strength of the dollar, stuff that is way, way bigger than Bitcoin's own little internal schedule.
And hey, don't just take my word for it. Listen to this. This is a quote from Robbie Mitchnick. He's the head of digital assets over at BlackRock. You know, only the biggest asset manager in the entire world. He's saying it flat out. Bitcoin is impacted by liquidity, just like gold is. This isn't some theory cooked up on crypto Twitter anymore, folks. This is the official view from the absolute top of the financial food chain.
And that right there is the key takeaway. Bitcoin isn't on a calendar anymore. It's graduated to the big leagues. Its fate is now tied directly to the global flow of money. It's plugged into the main financial grid now.
Okay, so if the theory is that this was a shakeout, a big transfer of wealth, is there any proof? You bet there is. We can actually look at the forensic evidence on the blockchain itself. Let's follow the money.
Just look at this chart. The data here is, well, it's unmistakable. During that big dip, what happened? The number of small wallets, we're talking about the retail folks, it went down. They were selling, probably in a panic. And at the exact same time, the number of huge wallets, the 1,000-plus Bitcoin whales, that number went up. They were buying every coin the small guys were selling. I mean, this is the classic textbook signature of a shakeout. You couldn't draw it up any better. It's a huge transfer of wealth from the so-called weak hands, the retail investors who get scared easily, over to the strong hands, the big, patient money that was just sitting there waiting for this exact moment to scoop it all up. Okay, now I need you to really lock in on this next number, because this might be the single most important piece of data to understand where the Bitcoin market really is right now. 70%. So, what's so special about 70%? Well, it means that a full 70% of all wealth in Bitcoin today has a cost basis, that's the price people bought in at, above $85,000. Think about that for a second. The entire center of gravity for this market has shifted dramatically upward. And the on-chain analyst Checkmate just nails it with this quote. All that talk you hear about Bitcoin crashing back to 30K or 10K or 5K, he says it's like ancient history. It just doesn't matter anymore. Why? Because the money isn't there. The vast majority of the capital, the serious, heavy-hitting capital, it's all anchored way up here now. So that leads to a pretty obvious question, doesn't it?
Who has pockets deep enough to absorb billions and billions of dollars of selling and, in the process, set a whole new floor for the market? I'll give you a hint. It's not the guy trading on his phone.
So look, when you put all the pieces on the table, you've got the Wall Street maneuvering, this huge shift in what drives the market, and the hard on-chain evidence, a pretty clear verdict starts to take shape. This crash, this wasn't the end of the party. This was the setup. The stage is being set for the main event.
Just look at all the forces that are converging at this exact moment. You've got gold at all-time highs, which is basically a giant warning siren for the traditional financial system. You have sovereign nations and huge funds quietly buying up these ETFs. Wall Street, as we saw, just cleared out the competition so they can sell their own Bitcoin products. NASDAQ is now listing these ETFs right alongside giants like Apple and the S&P 500. And to top it all off, it looks like we're getting a new Fed chair who is ready to fire up the money printers again. It's a perfect storm.
And that brings us full circle, right back to BlackRock. This last quote from them really says everything you need to know. Bitcoin has now registered in the arena as a real competitor to gold. For the first time, it's being seen at the highest echelons of finance as a legitimate way to play the debasement trade, which is just a fancy way of saying it's a way to protect your wealth when governments print too much money.
So, I'll leave you with this final thought. After seeing everything we've just walked through, does this really look like the end of a bull market to you? Or does it look more like the messy, chaotic, and kind of brutal middle part of the story? The part where the asset moves from the weak hands to the strong hands, from the short-term traders to the long-term holders.
The game has definitely changed. Something to think about. Hey, if you found this video helpful, do me a favor and hit that subscribe and like button. We'll see you next time.